So good day to all of you, and it gives me immense pleasure to welcome you to today's webinar organized by Frontclear and ICMA. This is one of a series of Africa-focused webinars we're organizing jointly, and today we'll be discussing specifically how to accelerate Ghana's repo development. But firstly, I'd like to thank Ingrid Hagen and her colleagues from Frontclear, not merely for the collaboration in preparing for today's webinar, but also for the ongoing and first-class cooperation over many years as we contribute to the capacity building agenda in many different countries around the world, including 6 on the African continent. We very much enjoy the interaction with Frontclear, and the combination of ICMA's and Frontclear's expertise has been, in my opinion, highly successful. And this work is wholly in line with ICMA's mission to promote efficient and effective capital markets. Our own footprint in Africa is growing, and out of our total membership of over 600 institutions, there are now 16 member firms based in 5 African countries. And this includes 3 members from Ghana: the Bank of Ghana, the Central Securities Depository, and the Ghana Stock Exchange. And the membership of these important institutions demonstrates a desire to drive forward developments in their capital markets in line with international best practice standards. We're also grateful to Mr. Eka Afetzi from the Ghana Stock Exchange, who chairs our West African Regional Committee. And this newly formed committee complements our other regional committee on the African continent in South Africa. Now, Ghana is a perfect example of how the combination of Frontclear's and ICMA's expertise can support a far-sighted, proactive, and responsive official sector. And in particular, I must commend the Bank of Ghana to create the framework for a robust and resilient repo market. As we all know, this is such an important foundation for further capital market growth. So we've been delighted to be able to contribute, and we very much congratulate the Ghanaian authorities on the progress so far. They're really providing a great example to other countries wishing to develop their own capital markets. And we're going to hear much more about this on the panel which follows. That concludes my opening remarks, and I'd like now to introduce Lisa Cleary, the moderator of today's panel. Lisa, a colleague of mine, is a senior director in ICMA's legal department, and she's an expert in the repo market, and she handles all of our GMRA and related work. So let me thank you, Lisa, and all the panelists in advance for your contribution today. And I hope that all of you listening today to this webinar find it interesting and useful. Lisa, over to you.
Thank you, Martin. So it's my great pleasure to moderate today's discussion. Ghana's money markets have rapidly developed over the last few years, and we've witnessed significant developments, including the adoption of insolvency legislation, the repo market guidelines, and the acceptance of the GMRA as the market standard agreement. Meaningful and committed interagency collaboration has helped push through these necessary reforms. And our discussion today will give the market regulators, legal and repo practitioners an opportunity to outline the foundation of such rapid development and highlight future challenges and opportunities. So first up, please let me introduce the panel. I'm delighted to be joined by Stephen Opotter, Director, Financial Markets, Bank of Ghana, Seth Asante, Partner, Bella Law Firm, Ghana, Hugh Friel, Vice President, Africa Frontclear, George Asante, Managing Principal, Head of Global Markets, ABSA Group, and Sam Idu, Deputy Managing Director, Fidelity Bank, Ghana. So I think the first thing to do is to get up to speed. So Steve, perhaps I can ask you to set the scene. How long has the development of the repo market been underway, and what were the policy aims in driving this project forward?
Thank you very much, Lisa. And on behalf of the Bank of Ghana, I'd like to thank ICMA and Frontclear for organizing this webinar. By way of introduction, repos and reverse repos have been used as instruments for the conduct of monetary policy operations since 1998. but this was under a master repurchase agreement. And in this framework, there was no transfer of title for securities used for the repo transactions. Instead, they were pledged. You all agree with me that repo markets are a requirement for liquid government bond markets, and they act as a bridge between money and bond markets. Some of the key functions played by repo market include credit risk management, funding of debt portfolios, playing the yield curve, and covering short positions as well as settlement failures. Repos are therefore a useful instrument for a broad range of market instruments. Ghana's current repo reform initiative started in the first quarter of 2018, led by the Bank of Ghana, but in collaboration with key stakeholders, of which many of them are members of the Ghana fixed income market, with the aim of improving the legal framework and enforceability of standard financial markets agreements in Ghana. This is based upon work that had earlier on been done, the Absa Financial Market Index reports in 2017 and 2018, pointed out that Ghana's financial sector could be further strengthened and made more attractive to investors by adopting standard financial market master agreements. So this is the basis for which this reform had started. So these GMR reforms started in the first quarter of 2018 with the goal of adopting the GMRA and then further on in the reform agenda to adopt the Global Master Securities Lending Agreement, that's the GMSLA, for money and bond market trading in Ghana. So far, working with these stakeholders I've mentioned, that's the Ministry of Finance, the Ghana Stock Exchange, representatives from the banking sector, the local CSD, and a local law firm representative. We've adopted the guidelines for the repurchase agreements in Ghana in October of 2019. These guidelines included a Ghana country annex. And in July 2020, the Bank of Ghana issued a notice to clarify that all GMRA-based repos qualify as eligible financial contracts to which netting arrangements described under Section 134 of the Banks and Specialized Deposit-Taking Institutions Act shall apply. So we've clarified that for us, under the Banking Act, we will recognize GMRA-based repos as eligible financial contracts. And then finally, in October of this year, the central bank required all repo trading in Ghana to be conducted under GMRA-based frameworks, and all banks were to sign GMRA-based documentation with eligible counterparties. For us at the Bank of Ghana, we have signed these GMRA documents with all banks prior to October 2020. We are currently monitoring progress on the GMRA reform measures implemented so far to inform us on the next steps.
Thank you, Steve. I mean, a huge body of work there over many, many years. Perhaps I can ask Seth if you might speak to the legislative reforms. Clearly, a huge amount of legal work's gone into the background here. So what's laid the foundations from a legal perspective for these repo market developments?
Thank you, Lisa. Good afternoon, everyone. So I think Steve has mentioned some significant aspects of the reform that has taken place. I think you need to take a step back, starting from 1998, when the Bank of Ghana issued its first notice on repo transactions. So that required a master agreement format. And I think if you look at the history, that counterparties did not comply with it. People used their own customized documentation. So the market was not consistent in the treatment of repos. If you go into this, when the CSD started, the CSD recorded and settled repos as pledges, and that created significant risk for recharacterization of repo transactions because they could not be seen as transfer of title. Now, so if you look at the last couple of years, a significant amount of work has occurred. So first and foremost, we've had the guidelines that was done in 2019, as Steve said, collaborative work. I worked with the Bank of Ghana team, the SEC, the GSC, for other market participants as well. And then from there, we've had significant development as well. We've had a Corporate Insolvency Act, which was passed this year. Now, that created a framework for netting in relation to qualified financial contracts. There are some questions about whether it applies across all counterparties, but we'll discuss that later. But that's a significant step forward. And also, even when you take into account the Banks and Special Deposit-Taking Institutions Act, which was passed in 2016, now it also made significant progress in relation to banks, because it created a framework where eligible financial contracts can be recognized and termination provisions in those agreements also recognized. Following the issuance of the Repo guidelines, the Bank of Ghana, as Steve said, now issued a notice recognizing GIMRA as a document to be used as an eligible financial contract, and therefore termination provisions are recognized. There is some work to be done there, but that's also a significant step. So if you look at in the last couple of years, legislatively, the Corporate Insolvency Act is a significant step, and the work the Bank of Ghana itself has done, which culminated in the Repo guidelines and the notice recognizing GIMRA, are all significant steps in getting Ghana to a position where we could possibly have a clean netting opinion recognizing repos in this jurisdiction.
Thank you, Seth. I think it's an important point to make, that where you have established the use of and recommended the use of the GMRA, you are already harmonizing the position in terms of the market standard. So Hugh, I mean, clearly Ghana seems to have been a great example, and Martin mentioned this at the top, of meaningful interagency collaboration driving rapid development. So would you agree with that assessment? And how would you describe Frontclear's role within that?
Lisa. Yeah, and indeed, I think Ghana provides a really nice example for Frontclear around sort of how to go about the process of market development. And I think that is probably set against the context of there's a real culture and mentality of market development in Ghana. And that really facilitates an environment that allows this collaboration between the different actors. And indeed, taking that train of thought a little bit further, the actors that are present, I mean, good representation on this call, but in Ghana, you have a very forward-looking regulator, especially commend Steve and his team in that regard. You also have a sophisticated banking sector. You have Seth and colleagues on the legal side. You have, the CSD has been very sort of involved in the development process. They have the Ghana Fixed Income Market Organization, the stock exchange. So all of these actors indeed come together in a very collaborative way in Ghana, and in fairness have achieved quite a significant amount, as Steve and Seth just mentioned already, in quite a short time frame. I mean, if I even look at just the 3-year plus time horizon that Frontclear has been involved in, it really is sort of an example of progress, not just on the transaction side, but also on our technical assistance side. And it's probably, we could point to an example of our development strategy in operating in practice. Ghana is probably the best example we can point to, whereby we have utilized guarantee capacity to absorb certain risks in transactions in the local market. We have deployed our technical assistance resources to address specific issues that have come to the fore, and that has served us very well. We've managed to address some of these issues already. I mean, if I go back to our first transactions in 2018. We've already seen significant progress on movement of securities free of payment, for example, on full legal title transfer of the collateral, as Steve and Seth have mentioned. So you see an evolution from quite, I would say the initial TRS structure was quite a sophisticated, perhaps overly sophisticated structure. The following year, we had the Repo guidelines, the use of GMRA was confirmed. And you move to sort of a much more standard product, utilizing the development work that has been done. And I think, a lot of that is testament to the technical assistance work, which Ingrid manages on our side. But I think in Ghana, we've deployed at this stage probably most aspects of our TA work. So we've done the training on various aspects of money market. We've done the legal and regulatory work in developing sort of, the regulatory developments that need to happen. We've been working with the infrastructure providers through the CSD. So again, on that side, it's a really nice example for us to point to, and indeed we do point to as an example of how to go about market development. And I really do congratulate the market and the participants on the achievements over the past 3 years. It's really nice for Frontclear to be able to participate in this type of a discussion and actually point to real material changes in the market. That's probably what I would say from the Frontclear side.
Thank you. I mean, I think absolutely, clear that this collaboration has been a great success, but how do you then measure that success? Perhaps we can ask George. A clear metric perhaps is Ghana's progress on the Africa Financial Markets Index, where Ghana has recorded the highest jump in both rank and score of any country on that index. So George, could I ask you to please put that into context for us?
Yeah, thank you very much. I think as you, Stephen rightly pointed, from an ABSA perspective, there are a couple of things we do on the continent, but importantly, it's a Pan-African group that believes that our success in future is linked directly to Africa's success and the growth and development of Africa. And in talking about the growth and development of Africa, one of the pillars we've identified as a group is enabling the financial market to power the continent's development. And through that came out with an index that, number one, determines the maturity of various markets across the continent, but importantly also identify areas within each market from a financial market perspective that need to be enhanced so that the financial market can play its vital role of mobilizing funding for development. And the Financial Markets Index has been there for 4 years. And in the publication of the index, which comes out annually, one of the key things that were identified across the continent was the issue of lack of property rights when participants in financial markets actually engage in contracts. So one thing that is not new on the continent is products. So repo transactions, reverse repo transactions are not new on the continent. In fact, if you go to any country, they will tell you we do repos. But then when you double click and you bring in your risk people, you bring in your legal teams to look at the kind of repo transactions that are being done, you actually realize that on the face, you think you have rights to whatever property or collateral that is in the repo transaction, but you actually don't. And it was one of the areas that were identified. And I think the great thing that we saw is countries like Ghana. I think if you move away from Ghana, you can find countries like Nigeria as well, who picked the recommendations in the index to actually transform their financial market. I think the most notable transformation we've seen across the continent, as was pointed earlier, has been what happened in Ghana. So, for example, in between 2019 and 2020, we saw Ghana's score on one of the pillars, which is the legal enforceability pillar, actually jump by 28% or 23%. And now that is unprecedented. And I think the other side is really the space of time within which that happened. And I think it talks to a lot of the commitment of the market, the commitment of market participants, the commitment of regulators. And importantly, I think the market development agenda was actually quite high, I believe, up to the vice president's office, for example. And that is the kind of example that a lot of countries, I believe in the next months or so, a lot of countries are going to come to people like Steve and say, Steve, how did you do this? Can you actually teach us to also do exactly the same as you've done? So, I mean, the Ghana example is a fantastic example. And later we'll talk a bit about it in terms of how you leverage on the biggest aspect of building an effective repo market, which is sorting out the property rights issue. How do you leverage on that to now let it translate into commercial activity? That we will talk about later. But I think the context is quite fantastic. And Ghana has become a clear example from your ability to build the building blocks for financial market development.
Well, Steve, it sounds like you're going to have a busy few months ahead of you. Thank you, George, for that summary. So we've talked about, the background here, the foundation stones. We've talked a little bit about, who's been involved in that, and how that can be measured by some metric through the index. But Sam, if I can ask you to perhaps comment on the market view and experience. Have recent developments created new opportunities, and what does all this mean for the real economy?
Yeah, well, thank you very much for today's session. I think for us being a local bank, so Fidelity Bank is a local bank in Ghana. As you develop and as you grow and become bigger as a bank, your needs evolve. So what we found ourselves do is, as we started out, depended a lot on DFI type funding, especially for foreign currency. But as your bank becomes larger, and those sort of needs diminish. And so there was a clear need for us to be able to attract or find foreign currency funding as a bank to be able to manage our day-to-day banking activity and then support our clients and so on and so forth. So really for us, it's a need that matched a lot of the work done by Hugh, Steve, George and co. So we pitched ourselves into it to try and get this over the line. So what we've seen for ourselves as a local bank, we have seen now a significant diversification in our source of funding. We've seen a lot of flexibility in that source of funding. We've seen some real positive impacts on the price at which we borrow, which for us is very important as we try to transmit this down to our clients that borrow. So if I look at it from a banking sector, the bank's real needs, this has really come to help us address a lot of the funding needs we have from the foreign currency. But even if I look into the local currency space, traditionally, and George spoke about this and so did Steve, you'd find that a lot of our borrowings on the interbank market was really on an overnight basis. Now this presents the opportunity for us to extend these borrowing requirements, and instead of probably a handful of banks trading among themselves, all of a sudden we have all 21 banks in Ghana now in a position to source liquidity in the market. And sometimes the requirements are not really long-term, they are for short periods or whatever. And Repo really provides us with that flexibility. But in addition to that, what I've seen turn out is a number of corporates have also now become owners of Government of Ghana securities. Now that for us is providing these corporates an opportunity to have a well-structured framework, a master agreement where they can always come and borrow to fund their business needs. And we've seen that a lot in the energy sector and the construction sector as well, which our clients are really happy about with regards to the ability to turn up, and because we have a master agreement in place and the borrowing requirements are quite smooth. That's what I'd say the impact has been on the banking sector, on corporates, and then by extension, feeding into the economy. We've seen the benefit on a reduction in interest rates, among other things.
Thank you, Sam. I think that really helps to put it into context and to understand the actual benefit, the realizable benefit of all of this, the background work that's gone into this. But perhaps I can ask the panelists now to look a bit more to the future, indulge in a bit of crystal ball gazing, and think about the to-do list. You know, what is next? And Steve, I'm going to come back to you if I may. So how will you build on what's already been done? Can you use it as a blueprint for other asset classes? So you mentioned securities lending earlier, or perhaps derivatives. Can this be used as a good blueprint for the development of those asset classes?
Okay, so in terms of the next steps, or in terms of this reform agenda, I'd like to first say that the Legal and Regulatory Review, or GIMRA, and ISDA enforceability in Ghana is still ongoing. With technical support from Frontclear and the engagement of local council, we have set Santi actually involved in that. Because the aim of the review is to secure ICMA and ISDA's engagement and views towards receiving a clean country opinion. I'm very optimistic that this review will be completed in due course to hopefully get a clean country opinion. And we are also excited that the reform measures are yielding results, and the market is acknowledging this. The result is that Ghana's ranking in the Absa Financial Market Index, as George said, has improved significantly. So this spurs us to even do more. So accordingly, the Bank of Ghana would like to lead a process with other key stakeholders to work towards the adoption and implementation of another important master agreement, that's the GIMSLA, the Global Master Securities Lending Agreement. we would like to get traction on a project to link our local CSD with international clearing platforms such as Euroclear. This is also an agenda that's on board. It is our view that these reforms will help strengthen Ghana's position as an African trade hub and champion of the African Continental Free Trade Agreement. So in the immediate future, these are the reforms that we would like to lead, the GIMSLA, and also hopefully see traction on linking our local TSD to an international clearing platform and help push the African hub in terms of trading. So you can see we'll be busy with this reform agenda, and we hope we can continue to count on partners like ICMA and Frontclear as we continue with this critical reform path.
Thank you, Steve. I guess if you're talking about immediate priorities, something I must ask is, how are you dealing with COVID-19 from a monetary policy perspective? How's that impacting your plans for the next steps?
Wow. Okay. So thank you for that. We in Ghana have had, just with many other markets, have had to deal with COVID, but we have approached it with strong policy coordination between the fiscal and monetary authorities. And this has helped prevent a deeper contraction of economic activity following the pandemic. So you see that even though we saw a drop in economic activity, we're still projecting to end the year with a growth of around 2%. And it's because of the number of things that we have done as economic policy makers. We also saw that the COVID-19 pandemic has had really a positive impact on trade. And we say this because as a country, we have a more diversified source for exports, being cocoa, gold, and oil. So even though we're impacted negatively due to low prices of oil, gold and cocoa has been quite steady. And in terms of fiscal implementation, the government had to make a decision between saving lives and livelihood. But the first option was to save lives. So the government came up with a number of strong initiatives to cushion the most vulnerable and provided a number of interventions, which kind of increased the fiscal spending. But we know, and the Minister for Finance has said that from 2021, we intend to get back on the fiscal consolidation path. So this is something that should assure investors that we're gonna have to make a decision to save lives and then livelihoods. But starting from 2021, we're gonna get back on a measured fiscal consolidation path so that the fiscal will be sustainable. In all of this too, we've had quite significant buffers in the sense that we are lucky that we started the year with strong reserve buildup of about 1.3 billion. And we followed that up with an issuance, Eurobond issuance of 3 billion in the first quarter of the year. So what that has done is that it prepared us with strong buffers so that it cushioned us. But in the process, in the first quarter, we also got some rapid credit facility from the IMF. All of this have helped us to cushion the FS buffers. So irrespective of all of these things that have happened, we still expect to build reserves of about 300 million for the year. And all of this means that we are propelled to end the year well and get into 2021 with fiscal consolidation and preparing for the next year.
Thank you, Steve. It's certainly been a challenging backdrop and will continue to be, I guess, for some time. So Seth, I guess perhaps returning to something Steve mentioned, which is the legal framework and the continuing work that needs to be done in respect of that, in order that you can create a legal environment where a clean netting opinion may be obtained for Ghana. And you know, that's an ongoing issue in any jurisdiction. I think that's something that we monitor on an annual basis from an ICMA perspective through our legal opinions. It's certainly not a static picture. So what do you think are the key deliverables in terms of creating that legal environment?
So I think there is real momentum towards resolving all issues that remain. And you know, the work we're doing with Frontclear and the Bank of Ghana, setting out, reviewing the legal landscape and setting out the reform agenda and the key issues that have to be resolved, I think would take us very far. And I think it's very important to realize, I think, as George said and Steve has said, that a lot of the achievements we have chalked, really happened over the last couple of years. And I have great confidence that we can achieve the proposed changes within a relatively short time as well. So there are some key issues. So first and foremost, in relation to the Corporate Insolvency Act, I think there are some clarifications that we need to introduce in the Act to clarify whether the netting regime that is introduced under the Act applies to banks or not. There is currently a distinction between different types of counterparties, non-bank counterparties and bank counterparties, and how it affects them. So we need to clarify that. I think we need to make a choice as a policy choice, whether we are going to have a netting policy that is all in one legislation, or we could have a netting regime that we have specifically for banks and one for other counterparties in the Corporate Insolvency Act. So that needs to be resolved. I think we have clarified the issue, and in the report that we are working with Frontclear and the Bank of Ghana, it will come out, and that will likely to be pursued. And then in the banking sector as well, in the Banks and Specialized Deposit-Taking Institutions Act, there are some clarifications that are required. Steve has mentioned the issuance of a notice by the Bank of Ghana to recognize JIMRA as a document as an eligible financial contract. Now we need to clarify whether it applies to ISDA as well, and whether we, instead of applying it across different types of documentation, we need to have a notice that is all-encompassing, covering different types of master agreements. And there are also some clarifications that we need to work through with the Bank of Ghana in relation to temporary stay issues that has to be clarified in the Banking Act. The Bank of Ghana has power to impose a temporary stay in relation to the termination rights of parties, even in eligible financial contracts. There are also some clarifications that are required in the banking legislation in relation to administration. When administration commences, there's a suspension of termination rights in relation to different types of contracts, and that may affect repo transactions and other similar transactions as well. So the key issue here is that we are very clear in our minds as to what we need to achieve. And the path to achieve them, I think we have a lot of regulatory sympathy, and working with Steve and his team at the Bank of Ghana. And if you look at what George said, the political will behind a lot of the changes that have occurred all comes all the way from the top. And I think that if Ghana continues along that line with political support behind these proposed arrangements, proposed changes, I think we can make them within a short time. So these are the key changes that we need to make to get us to quite a very good place in the legal framework. Thank you.
Thank you, Seth. I mean, a couple of follow-up questions, if I can. So I think you're absolutely right in terms of identifying the points for reform being, the first step, and then having the political will and the drive to then deal with those things. I'm interested in particular in the termination stay issues that you mentioned. So obviously this is something that we have had to contend with at a more global level as various jurisdictions have introduced moratorium resolution stays. So one of the bodies to which we look for some point of harmonization and benchmarking is the FSB. So the FSB key attributes of effective resolution regimes. And often we will see resolution regimes being introduced or imposed which diverge from those key attributes, and that becomes problematic. So I wonder whether that's something that you will be looking to in the development of the termination stays.
So yes, we'll be looking to the FSB attributes. I think what we are doing in the work with Frontclear is to look at the FSB attributes as a basis for making those recommendations to the Bank of Ghana. In relation to the temporary stay issue, I think there are two options that we have. One is to ask for amendments to the Act to clarify, but I think that's a potentially long way to look at. I think it is possible for the Bank of Ghana to work through guidelines on that. So potentially one of the recommendations we are going to make to the Bank of Ghana to consider is the issuance of guidelines to clarify how it will exercise the temporary stay discretion that it has. And hopefully using the FSB attributes as a basis for the recommendation the Bank of Ghana will be sympathetic to that. We have a lot of confidence that's the way to go.
Thank you. Okay, so Hugh, coming back to you then, in terms of the future steps and the reform agenda that Seth's laid out, what role do you think Frontclear will play in those future developments?
I think the immediate focus is sort of just being touched upon on the legal side and that piece of work that we are doing. And indeed, I know that you can appreciate, Lisa, having sort of coverage of the various legal environments that ICMA would cover, the importance of getting that right and, you know, dedicating time and resources and collaboration to actually, you know, get the right framework in place. Something that we are very focused on in the near term, I would say. And really, the other point that we would really encourage is the continued, I think you used the word collaboration earlier, but, you know, again, in Ghana, we have a really good system working whereby we are engaging, indeed, with yourselves through your African committee, chaired by Mr. Afezi, as you mentioned, to ensure that the end result is fit for purpose and that everybody is on board with the solution. So I really think that word collaboration and continued collaboration, you know, is important to understand the intricacies of how these various pieces of legislation sit together and combine to actually really impact upon the enforceability of netting agreements, for example, and master agreements. So I think that's a very important piece of work. And then I think maybe looking a little bit further ahead, it will be, I think, more of the same from a Frontclear point of view. We continue to look at transactions where we can help with our guarantee product. And indeed, as we have run risk in the country, it has really motivated us to address some, you know, the other issues around capacity building, which we're working with you guys on. We have, on the infrastructure side, we're working with the CSD on a project. In other markets, the guarantee is evolving into an umbrella structure, which can be very useful for facilitation of local trades. That's also something we would be eager to progress in Ghana in due course. And we, like I say, of course, the cross-border trades is something that we are continue to be engaged on a daily basis with the local market. So I think it's really longer term, shorter term is the legal aspects are really high on our agenda. Looking into the medium to longer term, it's sort of more of the same on the combining the transactions with our quite extensive technical assistance pipeline that we have planned for Ghana. And I think probably the important to note on the capacity building side is there quite an extensive training program, which is going to be launched early next year through what we call the Frontclear Academy, which is a good way to build the capacity of the local market across the various money market subjects. So that, of course, given the new age of online platforms, that is a completely online platform, but something that Ingrid has worked very hard on and is excited to. We're excited about the prospects there. And of course, yourselves have various ICMA scholarships, etc., that we think can really, you know, deserve promotion also. So I think that's sort of what we're looking for from if I look past the immediate focus. So
no let up in the workload just yet then for you?
No let up on the workload, but hopefully we get back to Accra soon. I'm missing visiting these guys.
Very good. Well, I'll come along next time. So George, you touched on this earlier, I think, but I'm really interested to understand your thoughts on any particular opportunities or challenges, in fact, that you see out ahead. And also, again, and you mentioned this earlier, the work done in Ghana, how does that impact at a broader regional level?
So maybe I take the last one first. And I think the first point is that the ABSA Africa Financial Markets Index, which is published annually, it's an index that benchmarks country to country. So what you can do as, let's say, a Botswana or Kenya, will be to look at the profile of all countries, see where you're doing well, where you're not doing well. So if I take the Kenya example, Kenya does quite well on the cash product trading, right? So bonds trade quite well in Kenya, and they're already trading even without a strong legal framework, okay? And then they compare to Ghana and they realize that, listen, our bonds are actually trading quite well without strong legal framework. Ghana has just put in one of the best legal frameworks on the continent, or it's one of the 5 countries across the continent with a strong legal framework to support and facilitate bond trading. What can I learn from Ghana? What can I pick from Ghana? And that ability to cross skill sharing is something that I think is going to happen. I expect countries across the Francophone region, for example, to look at Ghana and pick out a lot from Ghana, East Africa, Southern Africa. So that I expect to happen. And that's why I mentioned originally that whoever is part of the team doing this work, I mean, you should watch out, because a lot of the countries, interestingly, have been trying to solve this problem over time. And I mean, if you talk to Frontclear, and I believe ICMA, you will recognize they've been trying to do this for 20 years. But I think, unfortunately, for the continent and for countries, they haven't really known what good looks like, right? And now we've actually been able to pull together credible institutions like yourself who are telling people what good looks like, as confirmed by independent lawyers and also as confirmed by market participants. Importantly, the guys in risk who have confirmed that this is actually good. And I expect that to now permeate across the continent. So it may take time, but it may also happen very fast. So that's really what we are looking forward to. If Ghana is able to influence the rest of the countries to actually do what it's been able to do, I think that will really be fantastic. Now, coming to the opportunities, I think what has happened in Accra and Ghana in terms of establishing the right legal framework has the ability to trigger a chain reaction. And I think we've started seeing a bit of that across the market. I think for me, the first chain reaction and impact is really the ability to now facilitate the development of other products. So the reason why the derivative market across the continent, and including places like Ghana, Nigeria, etc., hasn't really taken off is the fact that there is no transparent, credible funding curve that people can actually look at and say, listen, I can look at this funding curve and manufacture a derivative out of it, trusting that wherever you tell me that I'll borrow money at in 3 months' time is actually where I'll borrow money at. That doesn't exist. And the reason why it doesn't exist is because we don't have a strong legal framework. Now that has been done. And therefore, anybody, I mean, if we're able to build on this to actually start building a strong Repo curve, it triggers that chain reaction of new products coming up. So very soon, you should start seeing FX options trading in Ghana. You should start seeing a much more transparent forward market in Ghana. You should start seeing bond futures in Ghana. I mean, you can do anything once you establish a credible funding curve. That is something that has been missing. So that, for me, is the first thing. I think the second thing is really the opportunity for other people outside the market makers, because for now, it's really been a thing of the banks. Okay, now the magic of financial markets is really not to solve problems for banks. Banks know how to solve their problems, all right, even without a strong financial market. I think the magic happens when institutional investors, when corporates, as Sam mentioned, start adopting these tools. And it becomes so powerful when corporates and other institutions start adopting, because there is the power of a strong repo market reducing the risk at which you do your transactions within the market, right? And then secondly, actually reducing the risk premium that you pay as an institution or as a corporate. And I'm very happy that Sam is on the call, and Sam actually mentioned that his risk premium has already started reducing. So he's borrowing at a lower curve or a lower cost than he used to borrow. Now, for me, that is why everybody in Ghana, including people who are outside the financial market, should be interested in what we are discussing. The fact that that chain reaction eventually touches on where you borrow as an individual or a corporate within the market. So that is the big opportunity. I think in terms of the other things that need to be done, as we build the repo market, there are certain other operational things that we need to think about. One of them is really redefining or defining a very world-class collateral framework. Okay, so we need to define what collateral will be eligible for repo transactions in the market. If I am supposed to post a variation margin to you, where are we going to price that variation margin? Okay, all those need to be decided in the market. I don't believe that has been done yet, but it's something that the markets need to actually come together and agree on in terms of the collateral instruments, et cetera, et cetera. And my wish will be when that is defined, we shouldn't limit it to local currency. And I think from Steve's perspective, this is actually going to be something that we use to facilitate the intra-Africa trade, right? So put in all the African currencies so that Ghana can truly become a gateway to the continent, because in Botswana or wherever I am, I can actually come and do a transaction in Ghana and collateralize it in my own currency, not the Ghanaian cedi. And there will be a way to actually determine that cross the cross price for Ghana and that other currency. Then my last thing that I wanted to talk about in terms of the challenges is sometimes the difficulty in getting other regulators to accept this. So I talked about the fact that it can be a powerful tool on the institutional side. But if the institutional client's regulator doesn't accept or recognize repos, then we are in trouble, right? So I think all other regulators, whether it's the SEC, the stock exchange, the pension fund regulator, must come on board so that this can actually perform the nuclear reaction that we are all looking forward to. So I would like to end it here, but I think there is fantastic opportunity that can come. There needs to be continuous improvement so that we can overcome the challenges that will come across as we build this product.
Thank you, George. I mean, quite the manifesto, but really exciting opportunities ahead if these things can be realised. If I can ask Sam, George has spoken about the magic of financial markets and what they can achieve, and it seems you may have been experiencing some of that magic already. But how would you describe the outlook for 2021 from a capital markets perspective?
I couldn't agree with George and Seth. They hit the nail right on the head, right? What we see in these markets is that you need various stakeholders. So you need the technical support, regulatory support, but you also need players or participants in the market that are going to drive the change that we are working towards from a legal point of view and right down through to the end. So for us, we see the opportunity to, as George talked about, to take the opportunity from the banking sector, your high street banks in Ghana, and we have plans to see how we take that through to the rural banking community. So all local banks in Ghana have signed on to the GMRA, but we want to take it a step further and take it on to the rural banks to be able to provide the needed liquidity that they need in those markets. So I think for us, we see ourselves as that agent of change that is going to help try and bring a number of these developments and changes and get as many people or different institutions, as George and Seth talked about, to be part of this change, because that's only when we see the true benefit of a drop in interest rates or other products that are going to be widely used by the market. And we also like some of the comments made by Hugh about the umbrella structure. And we will be looking to see how we can also bring that to bear and bring out some test cases to make that work. But I'd like to touch on the way the market will probably look like going forward. I mean, the number of changes we've seen our regulators do, which I must say has been absolutely crucial. So we've seen the SEC do a number of major steps to clean up the market, try and get institutional clients to have the right form of governance and so on and so forth. Now that has, in addition to the work already done by the central bank, means that a number of our large institutions, financial institutions, are in the right place where they want to be. We also have seen that the president has put together a committee, the Financial Stability Council. So that council brings together all the different regulators in the financial sector. So the SEC, the Bank of Ghana, the NIC, the NPRAs. So for the first time, sit around the table on a frequent basis to be able to bring to bear some of the discussions that come up from different sectors. So I think for us, what we see happening is general investor confidence has improved. The challenges immediately ahead of us, obviously, I would say it's COVID and how that takes a turn and where that would take us. A peculiar challenge for us is the election and how that would also evolve, because whenever we have a change in government, sometimes it takes a couple of months, maybe half a year or a bit more to try and get various bodies back in line. So depending on how the election goes, depending on how COVID treats us, hopefully we are quite optimistic about next year and going forward, and how we can bring this change that we see the various stakeholders today talk about actually materialize in Ghana. So we are quite optimistic about the future and what it presents.
Thank you very much, Sam. Let's move on to Q&A. I will just put them to the speakers generally. You may find that you desperately want to answer. If not, I will direct them. So let's start with regards to market development, what operational development are we likely to see from the CSD side in dealing with expected scale up? Quite a few of you mentioned projects and interactions with the CSD. So who'd like to take that one?
Maybe I should, I can make a start, Lisa. Indeed, I think we've been working closely with the CSD, both on our transaction side and just as these developments have played out around free of payment movement of securities, etc. And I know that there's ongoing efforts to sort of ensure that there's a platform that can support, the volume of trades that, as the activity ramps up. So we are engaged with them on an infrastructure project, and that encompasses, not just systems, but actually also the hardware and the risk management around how you actually perform your duties as a CSD. Indeed, in other markets, we've looked at sort of supporting the clearing infrastructure through the provision of settlement guarantee funds, for example. So that is also something that is in the Frontclear toolkit that we would be eager to explore also in Ghana. But indeed, I think the point is that on the CSD side, when the volume really ramps up, you must have a system that can facilitate movement of collateral, ensuring that collateral is done under full legal title transfer, that it's in the respective custodian accounts, and again that is all done in a timely fashion, and that obviously becomes more of a challenge as volume ramps up. But I must say that the CSD in Ghana is somebody that we've worked closely with, and again, like the other actors in the market, very progressive mentality, and really have a strong sort of affinity to the development agenda.
Thank you, Hugh. Does anyone else want to comment on the CSD interaction and scale up?
Maybe just a little addition. I think in our experience, we started off quite slowly with the CSD, but increasingly over time, we're now better aligned in what we all seek to achieve, and we're seeing significant improvement, collaboration. We are almost in and out of the offices given the work that we do, and we can see clearly steps in the right direction. Also, I think stakeholders who own the CSD as well are also now getting a little bit more involved. So you find that everyone is now involved with a common goal to try and get things to run. So we are in a far better place than we were a couple of years ago. And I think this would only continue into the future.
So completely agree with what has been said. I think for me, there are two things that the CSD needs to continually think about in terms of making execution of transactions easy for counterparties who will be interested in doing this. And this is cross-segment counterparties. Like I keep saying, this is not about just banks. This is about the broader economy. So they need to really think through it and check whether, if I'm an asset manager, I'm an insurance company, and I want to execute a repo transaction, how easy is it for me? And in answering that question, I think one of the things I'm encountering across the continent is the fact that a lot of our platforms are not straight through. So straight through processing is a very difficult thing across the continent. Now, you can never achieve scale, which I guess is what the question is trying to ask. You can never achieve scale in today's world if you don't leverage on platforms to create the ability for people to straight through process, right? So that is something that needs to be done. I think the ability for people to also revolve their securities in a particular day. So I need to be able to conclude my transaction on this day and repeat another transaction on that same security, so that the multiplier effect of leveraging my security and optimizing it actually comes to bear. Because if I have a security, if you leave a day between when the transaction settles and when I can use it again, it's quite costly, right, for a counterparty. Then the last one that I want to also probably put on the table for the CSD to continuously look at is how we create the ability for other collaterals outside the Ghanaian jurisdiction to be used to facilitate transactions in Ghana. So that could be a long shot, but it's definitely, I mean, if I go back to the vision that Stephen has just articulated, which is Ghana wants to be a hub, then if I hold some securities in Nigeria, I should be able to use it to facilitate a transaction in Ghana. Okay, which then also moves Ghana towards becoming more and more of a hub and a financial market innovation center. So those would be my additions to the points that have already been raised.
Thank you, George. So we have a more of a legal question now, so I might ask Seth to take this one. Should legislation to ensure enforceability of the GMRA or GMSLA be a separate and standalone piece of law, or should this be incorporated into the Insolvency Act? What is the common and effective practice?
Thank you. I think it should be incorporated in the current act, the Corporate Insolvency Act. I think we've already taken a step towards that. If you look at the definition of qualified financial contracts under the Corporate Insolvency Act, it is broad enough to cover these transactions. So we don't need separate legislation to cover that. I think what we need to sort out is the point I made earlier on, is how it applies to different counterparties, whether it applies to banks or it applies to all counterparties together under one legislation. But the Corporate Insolvency Act provides a framework for enforceability. And I think, pre-insolvency is not even an issue. I'm really talking about post-insolvency enforcement.
Thank you, Seth. I think maybe I'd ask Steve to take this next one, if that's okay. Are the regulators and FMIs working with other African countries, such as Nigeria, considering they have also made progress in adopting legal documentation and netting laws?
I want to start from the point of a central bank, that we have fora where we coordinate and we discuss regulatory reforms. For example, we have an Association of Central Banks, and even within the Central West African sub-region, we have a similar association. So in this fora, we discuss regulatory reforms and coordination. For example, when we did a soft launch of our repo reform in Washington, we invited central bank across the whole continent. So we are on the side discussing these issues. And I agree that there should be more collaboration and coordination so that we can have the African continent creating the necessary liquidity. So this is something we should continue to do. And that should not just be between central banks, but other regulators like the exchange commissions and so forth. So it's a good question. We should even pick it up more so that there is inter-regulatory coordination. As one of my colleagues mentioned, here in Ghana, we have been trying to ensure more coordination between the regulators. You take the SEC, you take the Bank of Ghana, and through the Financial Stability Council, we're trying to ensure there's coordination so that our policies are working more efficiently. And I agree that that should be extended throughout the regulators in the sub-region.
Maybe I can add something, Lisa, from the Frontclear side. Just given obviously from Frontclear, we're active in a number of markets, including Nigeria. Indeed, the developments in relation to the passing of the ICMA Act is very positive momentum. But I think really when I think about other markets. I think Ghana will really be an example to other markets that want to move towards, clean netting opinion territory around how you do that. With the passing of the Insolvency Act, there is a number of other elements that we've covered that we're working on. And it's also a case of sort of, understanding how to go about, actually making the changes necessary. Is it a legislative change that is required, or can, if you have a central bank such as Bank of Ghana that can issue regulations that can help the market as an interim solution, then we would really encourage sort of utilizing that power of the central bank. It can be a way of making progress in the near to medium term. And indeed, these legislative changes can take time. But I think Ghana really stands up and punches well above its weight when you compare it to other legal environments. It's really up there with, only South Africa, Mauritius, Nigeria sort of is in the same group, I would say. Considerable work being done in Zambia around the same legal issues. But it's really, I think it compares very well. And I mean, purely from a Frontclear point of view, we would use it as an example of how to go about these legal changes.
Thank you, Hugh. Let's see, what about counterparty scope? We touched on that a little bit. I know George mentioned it and Sam, but the repo guidelines issued apply only to banks in Ghana. Going forward, is there a plan on allowing other players in the financial industry, such as pension sector, from undertaking repo transactions?
Actually, I can take that. This is set. The repo guidelines are not limited to banks. It applies to other counterparties as well, including high net worth individuals and corporates. I think the key issue was what was raised by George and Sam, is about the consciousness of these counterparties that these opportunities exist for them to utilize, but the repo guidelines are not restricted. In relation to pension funds, I mean, we have in the work we're doing with the Bank of Ghana and Frontclear, we've raised this as an issue for consideration by the pensions regulator, the NPRA, that the investment guidelines of pension funds should be revised to allow pension funds to participate in the repo market. But currently, the investment guidelines do not allow them to do so. So that's one area that we are seeking clarification on, that it should be revised. But the guidelines do not restrict it to banks. It allows other counterparties to participate in repo activity.
Thank you, Seth. I think that's an important clarification on that question specifically. We do have a question on metrics. I think we spoke about in our pre-panel call the difficulty of sort of getting data. One of the participants has asked, what is the size of the repo market in Ghana? And I think there's probably quite a few different ways you could answer that question, depending on what you're talking about. I don't know if anyone wants to offer a view.
So maybe I can take a stab and an initial stab. I think one of the key things that need to happen with the repo market coming on stream is to make the repo curve, which is the resultant of the repo market, needs to be a transparent market, needs to be a trusted market or trusted curve, need to be independently published. And therefore, I mean, in other markets, what you will typically find is an independent clearinghouse will be publishing the repo curve on a daily basis, because they see all transactions that come through, whether it's coming from the central bank, it's coming from individual banks, it's coming from the retail side, everything goes through the clearing center, and therefore they will publish a result. I don't believe that is available now, but I mean, if you ask me, I think the Ghanaian system is actually a well-constructed system where you don't have different people putting their hands into the different aspects of a repo transaction. So he will tell you that in the other parts of the continent, a different person owns the central securities depository, the cash system, the bond system, and it's basically a bit of a spaghetti creation. Ghana is very different, and therefore I think it's very ideal for someone like either the the Ghana Stock Exchange or the Central Securities Depository to own the publication of repo prices and make it more transparent to everyone in the market. And I think that transparency itself will talk to people becoming aware of it and then beginning to use it. So that's one part. I think there is also a critical part in this whole puzzle, right, that needs to be fixed. And that critical part, in my view, is research or research houses. So we need more and more boutique investment bank. We need more and more banks to be writing about the repo curve and giving views on why the curve has behaved in a certain way over time or where they expect it to be. All right. So if you are able to mix the legal framework, participants broadening and actually allowing everybody to participate in that market, you get a publisher who is credible to publish the prices of repos or the repo curve, and then you end up with a lot of research and information on repos. I think it's basically a perfect combination for your repo market to really work.
Mm-hmm. Thank you, George. Any other comments on sort of data sets or understanding the market?
Maybe Lisa,
Sam.
if I may, I mean, and I agree with George. I think part of the challenge is that the market is essentially fragmented currently in Ghana. And I mean, I remember with Hugh, we closed our first cross-border trade about a year ago or so. And it was the start of it, to be honest. So we've seen a number of trades which are fragmented, and what we need to do, as I said earlier on, is to try and increase the number of participants to make the data points the frequency along which the data points are generated are, rather than have one or two every couple of weeks or whatever. So I think the real crux of it is to try and have us drive the wide use of it across the banking sector, across the non-bank financial sector. And that way we'll have enough data points to be able to produce something that is reliable. But what we've seen over the past 6 months or so are the odd large chunky trades done here and there, but we do need to have quite a few more data points. And that's what we're working on, and we're taking out into the rural banks and non-bank financial institutions and other banks in the market as well.
Thank you, Sam. I do want to end on a positive. So we have a comment here and then a question. We've noted the speed with which the development has taken place within this short period, and we want to encourage the stakeholders to keep the tempo in growing the market to comparative terms with the emerging markets, if not to be the advanced market. Can the panel look at what can be done to see a paradigm shift to move the market to the highest level? I guess we've all spoken to that already a little bit, but any final thoughts?
Maybe Lisa, I can start. I think that what we are seeking to do here is to have a market which is transparent and is connecting to investors. And the rules are very clear. Fortunately, we are being helped by African Financial Market Index, which is telling us what to do, how to compare what is happening across different markets in Africa. So we have picked the low-hanging fruits, and one of them is to have a standard financial market agreements that people can understand. We have also been informed that we need to improve upon our foreign exchange access. There are other pillars that we are following closely. If we continue to do that, where we are picking the areas where we are weak, then we think that we are building on the various pillars to improve the financial market access. And as you know, this is not something you do, it's going to take time. It's an evolution. We've picked the areas we want to work on. I think that we should focus and do that. For example, let's finish the GIMRA reforms. Let's start getting data or trades going on that. We have also said that we want to work on GIMSLA. I think that we should do that. There are other things we've picked to do, but we have chosen to use a multi-stakeholder approach, which involves not just the regulator, but market players like you've seen here, hearing from Sam and George, and being legal players in the market. So I think we should continue and be focused on the reforms, of course, listening to the market very carefully, and we should be successful.
Thank you very much, Steve. It remains for me to really sincerely thank each of you, our fantastic panelists, and thank you for your time and your contributions. And I'd like to then hand over to Ingrid Hagen, who's Vice President on Strategic Projects at Frontclear, for the closing remarks. Thank you all.
Thank you, Lisa, and thank you, Martin, and all of our speakers for sharing with us today amazing levels of details on the rapid and recent developments in the Ghanaian repo market. It's been very interesting, and it's been interesting to learn of Ghana's ambition to be a finance hub for Africa. The speakers have all been at the front lines of these developments and achievements, and backed by the clear and strong commitment of a regulatory body founded in the Ghana fixed income market. I'm certainly joined by many to say congratulations to all of your work. And we at Frontclear, our partners in our networks, are keen to continue to support you to expand on this dynamic. This is indeed all the time we've had for this webinar. Just to inform you that next time around, we're going to discuss Uganda as part of the ICMA Frontclear series on African debt markets. We thank you very much for participating and joining us today in this virtual event, and look forward to next time. Thank you and good afternoons.